Hey everyone, welcome back to another video. In today's video, I have a stock that is currently trading below their intrinsic value per share that I would like to analyze today. And that stock is LKQ. And LKQ essentially is one of the leading providers of automobile and repair parts and services. So they compete in the same industry as some other companies you might be familiar with, like O'Reilly Auto Parts and AutoZone from those famous commercials that everyone's heard of. And so in this video, I'm just going to look at the financial statements for LKQ, and then I'm also going to analyze them from an intrinsic value standpoint against their competitors, and then also see if at the current share price of about $50 per share, if this is a good price to buy into LKQ from a value investing perspective. So thanks in advance for leaving a like on this video, and let's get right into it. So right here, we can see that this is their income statement where they're comparing their second quarter results for 2022 and 2021. And we can see that year over year, they've actually experienced a decrease in their revenues from about $3.4 billion in the second quarter of 2021 to $3.3 billion in the second quarter of 2022. So that's a decline of about 2.7% year over year in their revenues, as well as a decline in their gross profit from about $1.4 billion to $1.3 billion. But despite the fact that their revenues decreased 2.7% year over year, we can see that their net income actually increased from about $306 million to $420 million. So that's an increase in their bottom line of about 37.7% in the same year that their top line decreased 2.7%. And then on top of that, if I scroll down here to their earnings per share, we can see that per share earnings came out to be about $1.49 per share in the second quarter, compared to $1.01 just 1 year ago in the second quarter of 2021. And so this right here is an increase of about 47.5%. And basically what that's telling us is that their net income not only increased in the same year that their revenues decreased, but they also bought back shares from the market, repurchased common shares. And so that reduced their common shares outstanding, which is why their earnings per share increased even more than their overall net income did. And so they're obviously trying their best to return a lot of value to their shareholders. So if I scroll down here to page 5, we can see their balance sheet, and they're basically comparing their balance sheet for the period ended June 30th, 2022 to the period ended December 31st, 2021. And so we can see that year over year, or not really year over year, but from their last period to the current period, their assets have decreased from about $12.6 billion to $12.1 billion. And we can also see that the majority of their business is financed by equity as opposed to liability. So, or no, it's actually financed majority by liabilities as opposed to equity. We can see they have total stockholders' equity of about $5.6 billion, which means that their total liabilities would probably come out to around $6 to $7 billion, somewhere around there. And so most of their business being financed by liabilities means that they're going to be paying higher interest payments, which are going to be eating into their cash flows. But we can also see that the increase in their stockholders' equity came as a result of an increase in retained earnings, which is earned capital as opposed to contributed capital from additional paid-in capital by issuing new shares, which would have diluted shareholders. So in this case for LKQ, this is good news because it means that the equity position they have in their business is growing as a result of the positive revenue from their business. And lastly, right here, we have their statement of cash flows, and we can see they're comparing the first half of 2022 to the first half of 2021. We can see that for the first half, they had net cash provided by operating activities of about $737 million, which is a decline from $933 million for the first half of 2021. But also right here, they obviously don't show the second quarter results for their cash flows, but they pointed it out in a different part of the report. Basically, for the second quarter, their operating cash flows came out to be about $328 million, and they also had free cash flow after subtracting their purchases for property, plant, and equipment, or their investments in capital expenditures, of about $288 million worth of free cash flow that they could then use to either invest back into their company or redistribute to their shareholders. And that's one of the metrics that Warren Buffett really loves to keep his eye on. And also in their financing activities right here, we can see that they're pointing out where they returned value back to their shareholders with their dividends and purchases of treasury stock. They paid out dividends of about $142 million in the first half of 2022 compared to no dividends paid out in the first half of 2021. So they're returning more value to their shareholders this year than they were last year. And they've also repurchased about $528 million worth of treasury stock. And within this line item, although it doesn't show it, they pointed out in another part or another section of their report that in the second quarter, they actually repurchased about 8.1 million shares of common stock for a total of about $404 million in the second quarter. And then on top of that, their board of directors recently authorized a total share repurchase increase of about $2.5 billion through to October 2024. So that's basically $2.5 billion worth of cash that they're anticipating returning back to shareholders potentially through to October 2024, so the next 2 or 3 years or so. So that's definitely something to look forward to for shareholders of LKQ. And so now what I want to do is look at this discounted cash flow model here to figure out what the intrinsic value of LKQ's company is so we can know if it's trading at a good buying price right now. And these estimates I got from Yahoo Finance. So analysts on Yahoo Finance are estimating that they believe LKQ is going to grow at a rate of about 33% compounded annually over the next 5 years. So I slashed that value in half for the next 5 years after that, looking for a minimum return of about 10%. They had about $1.7 billion worth of free cash flow in 2021. They have a net debt position on their balance sheet of about $3.4 billion, and they currently have about 274 million shares outstanding. And so once we account for all of these metrics, we can see that the projected free cash flow for the next 10 years based on these growth rates comes out to about this sum right here. And so if we discount this back by our discount rate of 10%, we get the present value of the future cash flows for the next 10 years. When we add these values together, we get the present value of about $47 billion minus the net debt currently sitting on their balance sheet. That gives us the intrinsic value of the entire company in billions, which, as we can see right here, comes out to be about $43 billion. And when we divide that by the 274 million shares outstanding, we get the intrinsic value per share, which is estimated to be about $160 per share right now, with a 50% margin of safety of $80 per share if these growth rates are to be believed by Yahoo Finance. And so if we compare that to the current share price for LKQ, we can see that LKQ is currently trading below a 50% margin of safety of $80 per share because they're trading at $50 per share right now. And we also saw that over the last year, they're down 4% in the same year that the S&P 500 is down 16%. So they're beating the market this year, and because they haven't fallen as much as the overall market. And so that might be one of the reasons why they're trading below intrinsic value per share. We can also see that over the last 5 years, they're up about 37%. So they're actually underperforming the overall market over the last 5 years. But based on that, I mean, it looks like if these estimates from Yahoo Finance are to be believed, that there's definitely a lot of future growth potential for LKQ. And so if I scroll to the right here, I actually did a competitor analysis comparing LKQ against other companies competing in the same industry, in the auto parts, products, and services industry. So I compared their business efficiency against O'Reilly Auto Parts, AutoZone, and Advanced Auto Parts. And we can see that when we compare these metrics against each other, that LKQ has the lowest gross profit margin, and they have the second lowest net profit margin out of these 4 companies. It seems like O'Reilly Auto Parts and AutoZone are definitely dominating in terms of business efficiency. And so when I saw that, I wanted to see if O'Reilly Auto Parts and AutoZone presented stronger buying opportunities than LKQ. And so I ended up doing an intrinsic value analysis for those companies too. And we can see that for O'Reilly Auto Parts, their intrinsic value per share is estimated to be about $530 per share. And so if we go to their stock price right now, we can see they're currently trading at about $737 per share. So based on the estimates from Yahoo Finance, they would not be trading below their intrinsic value per share. But I did find it a little bit interesting that in Yahoo Finance, we can see that they're estimating that O'Reilly Auto Parts is going to grow at 8% over the next 5 years, but they're estimating that LKQ is going to grow at 33% over the next 5 years. So they're anticipating that LKQ is going to have a higher growth rate than O'Reilly Auto Parts. And then on top of that, if we go to AutoZone, we can see that AutoZone, according to Yahoo Finance, is also anticipated to have a slower growth rate than LKQ. And so if we look at their intrinsic value per share, it comes out to be about $2,250 per share, which compared to their share price means that AutoZone is also trading above their intrinsic value per share right now because they're trading at $2,270 per share. So from this, basically what I can gather is that these valuation models in terms of this competitor analysis for these four companies is heavily dependent on LKQ actually being able to grow at 33% per year, because if we gave them a similar growth rate to the other companies, we have about 8%, 13%. So let's say we gave them a 10% growth rate and then cut that in half at 5%. That would put their intrinsic value per share at $48 per share, which compared to their current share price would also mean that LKQ is trading only slightly above their intrinsic value per share, similar to AutoZone is. They're only trading at about $20 above their intrinsic value per share. So if LKQ isn't able to maintain this projected growth rate from Yahoo Finance, then they would not be trading below intrinsic value per share, similar to their competitors like O'Reilly Auto Parts and AutoZone. And for the last competitor, we can see, I believe their company is called Advanced Auto Parts. Yeah. They also are projected to have a slower growth rate than LKQ, according to Yahoo Finance. And we can see their intrinsic value per share is estimated to be about $159 per share. And we can see they're trading above their intrinsic value per share currently at about $171 per share. And something else I wanted to point out is that if we judge these companies based on their past stock performance, we can see that almost all of these companies, with the exception of Advanced Auto Parts, are beating the market. S&P 500 is down 16%, Advanced Auto Parts is down 18%, LKQ is only down 4%, so it is beating the market even though it's down on the last 12 months. But if we look at O'Reilly Auto Parts and AutoZone, they're like completely dominating the market. They're not just beating the market, but they've actually returned a ton of value back to their shareholders who've been invested in their company for the last year. We can see AutoZone is up about 35%, O'Reilly Auto Parts is up about 21%. So they've definitely been returning a lot of value just by holding on to shares of their common stock, which is not something that LKQ has done, even though we can see that LKQ, according to Yahoo Finance, is trading below their intrinsic value per share, and none of the other three companies that they're competing against are doing so either. So I would say from this, I would gather that from a business efficiency perspective, as well as from return on investment perspective from the past stock performance, it looks like O'Reilly Auto Parts and AutoZone present the best buying opportunities. But if we're looking at a company to buy into them below their intrinsic value per share, then according to Yahoo Finance, it would seem like LKQ would be the right choice, since it's estimated to be 160 and they're currently trading at 50, even though we observe that LKQ is projected to have higher growth rates than the other three companies that they're competing against. So I'm not really too sure what to make of this competitor analysis. Like I pointed out before, if LKQ isn't able to grow at 33% over the next 5 years, then they aren't trading at below intrinsic value per share right now. And that's something that I really like to look at when I'm doing these valuation models, is if a growth rate looks a little bit, a little bit like it might not be that believable, I like to look at other companies in the same industry and see what their projected growth rates are. And we can see that the other three companies have similar growth rates. So I would anticipate that the growth rate for the industry would be closer to these values and not so much at 33% the way it is for LKQ. But I'm not too sure. Definitely going to keep my eye on this stock, and I would love to know what everyone watching this video thinks about these companies and if any of them are presenting buying opportunities at the moment. Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.